You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome to the Deep Dive. We're jumping straight into the sources, pulling out the key insights you need.
That's right.
Today, we've got a high-stakes global briefing dated October 28, 2025. And it really paints a picture of some intense global shifts.
It really does. This briefing is, well, it's crucial because it connects things that often feel separate, doesn't it? You know, tiny currency moves, big commodity decisions, geopolitical hotspots, all linked back to just a few key meetings.
Exactly. And that's our mission here, to quickly synthesize all these complex global movements. We want to give you that single, informed picture, tying the diplomacy straight back to the markets.
Right. And the snapshot from this briefing shows basically four main themes right now. You've got a softer dollar, but a firmer yen, commodities, kind of all over the place.
Okay.
Trade is still the main macro story, definitely. Yeah. And quite a lot happening on the geopolitical front, too.
Okay, let's dive into that, starting with the currency chessboard. The dollar's a bit softer, yes, but the real action seems to be with the Japanese yen. What kicked that off?
Yeah, the yen's really leading the way. The big move was dollar-yen slipping back below the 152 handle.
Ah, 152. That's a huge level. Traders watch that closely for intervention talk.
Exactly. And the trigger. It looks like that meeting in Tokyo, the one following the Trump-Takaichi engagement.
And the language they used. Our sources say they emphasize policy coordination and stability in exchange rates. That sounds, well, deliberate.
Oh, absolutely deliberate. That phrase is doing a lot of work. Markets hear coordination from top officials on FX, and they think, okay, synchronized action is now on the table if things get too wild.
So it's more than just talk, then. They actually believe something concrete might happen.
They do. It's seen as a strong signal, a commitment, really, to cap that volatility. And you saw the market react, pulling the dollar back pretty quickly.
Okay. What about elsewhere? Europe?
The euro's nudged a bit firmer, but not much happening data-wise there. Sterling, though, the British pound, that had a bit of a roller coaster.
Yeah, it started strong, then cooled off. What happened?
Domestic news. Reports came out that the UK's fiscal watchdog might cut its trend productivity estimate.
Okay, and why does that matter for the currency right now?
Because a lower long-term productivity forecast hits the government's borrowing and spending plans. Hard.
Oh, how so?
Well, lower potential growth means basically tighter budget space. Any big spending plans or tax cuts they had lined up, suddenly much harder to afford without blowing debt targets. It's a reality check.
Right, so London's dealing with fiscal limits. Meanwhile, in Asia, the focus seems to be stability, especially from China's central bank.
Absolutely. The PBOC keeps signaling stability. They set another stronger yuan fixing, a 7.0856. They're clearly managing things carefully before those big U.S. talks.
And the neighbors reacted how? The Aussie, the Kiwi?
Yeah, the high beta antipodians, that's what we call them.
Meaning currencies sensitive to commodities and risk.
Exactly. They held on to their gains. Markets seem to be positioning for maybe some stability or at least no major blowups ahead of that Trump-Xi meeting and central bank decisions, betting on things calming down a bit, perhaps.
Okay, let's pivot. Section 2, commodities. You said it's a mixed bag. Let's start with oil. Seems like it's struggling for direction.
It really is, despite all the geopolitics swirling. That reflects, I think, caution within OPEC plus question. The signals we're getting suggest they're leaning towards another production increase, but a modest one, third one in a row.
How modest are we talking?
Around 137,000 barrels per day, give or take.
Huh. 137K. If they're worried about supply, why so small? Doesn't that almost signal they're still worried about demand, maybe global growth slowing down?
That's exactly the balancing act they're trying to pull off. They want to show they're listening to consumers, hence the small hike. But they're clearly nervous about flooding the market if a slowdown really bites. It's managing expectations more than anything.
We saw Iraq say they'll stick to their quota, which helps compliance. And that pipeline fire at Zubair thankfully didn't hit production.
Correct. No impact there.
So oil's cautious. But you mentioned something really interesting on the energy front, the LNG paradox. An IEA insight.
Yes, this could be huge long term. The IEA is flagging this unprecedented wave of new LNG capacity coming online. We're talking something like 300 BC meters.
Wow, 300 billion cubic meters.
Over the next 5 years, that's a massive amount of new supply hitting the market.
So what does that mean for buyers, especially, say, in Europe?
It means that, assuming no major geopolitical shocks block transit routes.
A big assumption these days.
True. But assuming things hold, the medium term points towards softer gas prices. Significantly softer. That sheer volume of supply suggests a glut is coming eventually. Anyone signing long-term deals now has to factor that in.
But why haven't prices dropped more steeply already if this wave is coming? What are the holdups?
It's that geopolitical risk premium and logistics. Potential disruptions at choke points or political moves forcing buyers away from certain suppliers. Until those routes feel absolutely secure, prices will carry that extra uncertainty.
Makes sense. Okay, what about metals? Gold, copper.
Gold tried to get back above that key USD 4,000 an ounce level, but it faded as the dollar firmed up a bit.
Dollar strength often weighs on gold.
Exactly. And traders are probably just waiting, ahead of these big policy events. Copper also eased back a little after its strong run, tracking that more subdued mood in Asia. Again, waiting for signals from trade talks.
Which brings us nicely to Section 3, trade and tariffs. You said this is the primary macro driver this week. Let's start with the new U.S.-Japan Economic Alliance. What's the core focus?
It's deeply strategic. The main goal is securing diversified supply chains for critical minerals and rare earths. It's all about resilience, making sure essential tech inputs come from friendly allied sources.
And they're using coordinated policy investments, building their own system, essentially.
That's the idea. And they've put a clock on it. Measures expected within 6 months to back projects delivering finished goods to the U.S., Japan, and other allies.
It really feels like a shift from just-in-time to maybe alliance-only supply chains. Are they targeting specific practices?
Oh, definitely. The language points directly at what they call non-market practices.
Which is code for?
Code for things like state subsidies, forced tech transfer, pricing that isn't transparent, stuff that distorts fair competition. This pact aims to create a kind of parallel, clean supply chain.
And while the U.S. and Japan do that, Beijing's not standing still. They're strengthening regional ties.
Exactly. That's the countermove. Beijing and ASEAN just signed their Free Trade Area 3.0 upgrade protocol. That boosts integration across Southeast Asia significantly. It highlights this alternative, massive economic sphere right as U.S.-China talks are ongoing. The world is definitely splintering into blocks.
Speaking of friction, North America, that trade file between the U.S. and Canada is still hot, isn't it? Talks halted.
Yeah, it's still tense. And it's stuck on a domestic political issue, believe it or not. Ontario's premier refused to apologize for that anti-tariff ad Washington didn't like.
Seriously, that's holding things up.
Apparently so. That political stubbornness is keeping things unstable, even when everyone wants certainty.
And Europe, what's London doing on the trade front? I saw something about steel.
Right, London's trying to be strategic here. They're pushing this idea of a steel club with the U.S. and the EU.
A steel club?
Yeah, basically an alliance of countries committed to high environmental and labor standards for steel production. It's framed as a way to jointly push back against Chinese oversupply and maybe link the UK back into that transatlantic trade picture more smoothly.
Interesting angle. And one last detail on trade, a small shift in agricultural access.
Yes, potentially significant, though. Japan signaled it's close to opening its market to Brazilian beef.
Okay.
Japan's a huge, high-value market for beef. If Brazil gets more access, that could really shake up the competition and maybe eat into the U.S. export share there. Changes the numbers for American ranchers.
Wow. Every single move has these ripple effects. Okay, let's shift gears one last time. Section 4, geopolitics. Still very active, and we need to connect these moves back to the economics.
For sure. In the Middle East, things remain volatile on the ground. Reports of Israeli vehicles firing in eastern Gaza City, for instance. That just underlines the instability consuming diplomatic energy.
And the Russia sanctions. Any updates there? Lukoil, Rosneft.
Yeah, Lukoil is reportedly getting ready to sell off foreign assets, clearly reacting to those U.S. measures, basically pulling back its global footprint. But the Rosneft detail is quite interesting. Washington seems to have floated a 6-month window for Berlin to sort out the ownership of Rosneft's German assets.
A deadline. Why give them 6 months? Why not just seize them?
It looks like targeted pressure combined with, well, pragmatism. Those assets include key German refineries. Giving a temporary exemption, that 6-month window, keeps fuel flowing in Germany for now.
avoids immediate disruption.
Exactly, but it puts huge pressure on Berlin to find a non-Russian owner within that time to keep the exemption. It's a clever economic statecraft, really.
And we're also seeing strategic alignments deepening elsewhere, Moscow and Pyongyang.
Yes, that relationship is getting tighter faster. North Korea's foreign minister met Putin and, importantly, agreed with Lavrov to set up a formal strategic dialogue track.
So more than just photo ops, a real structure.
A structure, yes, and both sides publicly backing the other's security stance. It's solidifying a counter-alliance in the region.
But contrasting that, there's a bit of a thaw elsewhere in the Indo-Pacific, Tokyo and Seoul.
Yes, and this is potentially very positive for regional stability, fitting right into that U.S. alignment strategy. Tokyo and Seoul are apparently moving to schedule their first proper leader-level summit, aiming for October 30, maybe on the sidelines of APEC.
Any improvement there is good news for the U.S. strategy.
Absolutely. Stability between those two key allies strengthens the whole free and open Indo-Pacific idea Washington keeps pushing.
Which brings us right back around to that U.S.-Japan minerals pact we started with.
Exactly. See how it all connects. U.S. officials are explicitly framing that minerals deal and this diplomatic progress as part of that bigger picture. Defense alignment, supply chain resilience, economic stability, they're all tangled together now. The economy is the security strategy.
Okay, so let's synthesize this. Key movements. Yen strength from political talk. OPEC plus being cautious with that small hike. The U.S.-Japan minerals pact formalized, and these geopolitical alliances hardening, often with economic deadlines attached.
Right. The big takeaway for you listening is that policy language, these strategic frameworks, they're driving markets maybe even more than the usual economic data right now.
So what should we be watching most closely near term?
I'd say three things. One, the actual details coming out of that U.S.-Japan minerals framework, what happens in those first 6 months. Two, any concrete, maybe unexpected results from the Trump-Xi meeting. And three, energy headlines driven by sanctions, especially Russia's asset sales and that German deadline for Rosneft, those could really shift things.
That gives us a clear focus. This has been, well, a really packed look at a fast-moving global picture.
It certainly has. And maybe a final thought for you to chew on as we wrap up. Given that the trade world seems to be visibly splintering, right? You've got the U.S.-Japan alliance focusing on critical minerals here, China and ASEAN upgrading their FTA over there. What does this tension, this creation of parallel economic worlds actually mean for the long-term stability of capital flows? And how much, really, will currency moves like the yen's be driven purely by political language coming out of Tokyo or Beijing, maybe even more than by what central banks do with interest rates in the months ahead?
A lot to think about there, especially as we head towards the end of the year. That's a perfect place to leave it. Thanks for joining us for this deep dive. We'll talk to you next time.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.